Hey everybody, it's David and welcome to spxcapital.com. I will try and make the video short. It's the first video, so if I talk a lot, it's only in an effort to pass on the bit that I've learned. Okay, so what happened? Let's draw this a median of this consolidation zone here. Let's imagine for a moment that you were short in this area and you didn't take profits, or you came up and you tried to sell the double top area and it didn't work out. So what do? What some people will do is sell into the next consolidation and hope for a sell-off. And guess what? If the market comes halfway back, and if we draw a Fibonacci retracement here to here, the market comes halfway back, you get your money back, and that's why we were getting support so strongly there. I'm sure also a lot of people probably sold into this area here thinking that it was the next leg down in inverted commas, etc., etc. Of course, figured out after a day or two that it just wasn't happening, and then that is the people selling. It's why I never sell selling. I will never sell a red candlestick. I'll always sell into a resistance area and look for the pullback. Anyway, so they became the material for a short squeeze. We can see today that we had quite a lot of volume coming in. So what happened today? What resistance did we run into? Well, let's take the opposite tack. Imagine that you were all uber bullish like a lot of people were up here, and then suddenly you wake up on Monday morning and price opens down here. Well, what do? What do some people do? Not what I do, not what I would recommend anybody else do, but what do some people do? They average. Okay, so you've bought up here, you've bought down here. Where is your average price? Fibonacci retracement, boom, 50% retracement. Where do you get your money back? Right here. That's why there was supply entering the market there. Okay, it's a halfway back. It's a place where people can get their money back, and if futures traders are bearish, it's a place where they will sell into the ES, hoping for some further downside in the market. Today's breadth only 1.7 to 1 advancers to decliners. So this rally really, if this is the springboard for the next leg up, to my eye, the wood is a little bit rotten. So I'm very cautious, and I have no long position. Any intraday positions or whatever else I closed because I was seeing this 50% retracement here. Now, if the bears are short from up here and they start to see their profits being eroded, that could lead to a little bit of trouble for them, and they're going to go cover. So where is their line in the sand likely to be? Let's try on a price level here. I would imagine that if price gets up here above, really above this 1007, it's 1007 or 1005, 1003. That's really when the bears are going to start thinking, uh-oh, number is up. But for the moment, because of this congestion zone up here, longs I would be very cautious on. Personally, I'm going to be very cautious on longs. I will only trade very specific setups, and I'd really be looking for some form of safe entry rather than just getting in at the market or whatnot. So tomorrow, if we go above 1002, I think we'll probably make 1007 fairly easy, and if we get above 1007, I would imagine that ultimately we are off to new highs. If on the other hand we start selling, I would imagine that the target for that selling is approximately down here at 965. 965, somewhere between 977 965 I would see as support for tomorrow, that being the negative 23 of this 50% retracement on a Fibonacci scale. Okay, that's it on the ES.